All right, so let's dive into something kind of interesting today. We're talking Roku,
Oh,
and we've got this company that's growing and expanding like a typical growth stock, right? But here's the thing, the market's treating it like it's already peaked. So
hmm.
we're going to try to unpack this using a Motley Fool article. It's from February 27th, 2025, and we're going to see if we can understand why Roku might be undervalued.
Yeah, that's a fascinating paradox. The market seems to be looking at Roku's past struggles, especially that dip a few years back, instead of recognizing its current momentum.
Yeah, right. The article mentions that Roku stock has been down 37% over the past 3 years, which definitely makes it look like a company in trouble. But then, over the last 6 months, it's actually climbed 23%. That's been driven by some pretty solid earnings reports. Like, it's been on a bit of a roller coaster ride, plummeting and then surging back up. So, is this a sign of a true comeback or just a temporary spike?
That's the million-dollar question. To get a clearer picture, we need to consider how Roku's playing the growth stock game.
Okay, let's unpack that. So the article explains that growth companies like Roku are all about rapid revenue growth, often prioritizing that over making profits right away. They pour money into things like R&D and marketing, and sometimes even sell their products at a loss to grab market share. So is that what we're seeing here?
Absolutely. It's a classic long-term strategy. It can be risky, but the payoff can be huge if it works. They're banking on the idea that building a massive user base, especially globally, will ultimately lead to profitability down the line. And we've seen this playbook before. Remember Netflix back in 2016 and 2017? They went all in on growth, and it led to an incredible 30% annual sales growth.
Interesting. So you're saying Roku could be following a similar path. Their revenue did grow by 18% in 2024
Right.
and then jumped to 22% in the fourth quarter. That's not just growth, it's accelerating growth.
Exactly. But here's where it gets really intriguing. Despite this impressive growth, Roku's price-to-sales ratio is only 3.2. Now, to put that in perspective, that's actually pretty close to Nike's ratio of 2.5. And we all know Nike. It's a well-established, mature company, and its sales are actually shrinking. So why is the market valuing a fast-growing company like Roku almost the same as a slow and steady giant like Nike?
That's a really good question. It almost feels like comparing apples to oranges. I mean, if Roku is growing so rapidly, shouldn't its valuation be significantly higher than a company with declining sales? Is the market missing something here?
It's possible. It seems the market might be stuck in the past, fixated on Roku's earlier performance, instead of its current trajectory and future potential. And let's not forget, this is a company with massive global potential.
Right. They're already dominant in North America, but they've barely scratched the surface internationally.
Exactly. And their CEO has been very vocal about focusing on growing their international streaming households. Even if it means delaying profits in those markets for now, it's a long-term vision, putting growth ahead of short-term gains.
Hmm. And that sounds a lot like, you guessed it, Netflix's global expansion strategy, which turned out to be incredibly successful. Could Roku be on track to achieve that kind of scale?
It's certainly a possibility worth exploring. And when we consider this global growth potential, Roku's current valuation becomes even more puzzling. The market seems to be pricing it as if its growth story is already over, completely overlooking the massive international opportunity.
It seems the Motley Fool author agrees. They're saying Roku is significantly undervalued right now and see it as a great buy-in opportunity.
Of course, remember this is one analyst's opinion, and investing always has its risks, but it's a compelling argument, and it definitely raises some important questions for us to think about.
Okay, so what stands out to you about all of this? What's catching your attention as we dig into this puzzle?
Well, I'm particularly intrigued by, well, for me, it's their global strategy. That's
Yeah.
definitely the most interesting part. It's like a whole new frontier for them. And if they can even come close to replicating their North American success in other parts of the world, that could be huge for them.
Yeah, that's a great point. The international market is vastly larger than North America. Just imagine the potential if Roku manages to become the leading streaming platform in, say, Europe or Asia.
Exactly. And the fact that they're choosing to prioritize growth over profits in these new markets, just like Netflix did, really suggests that they're thinking long-term and strategically positioning themselves for future dominance.
It does make you wonder, though, are there any key differences between Roku's approach and what Netflix did that might signal a different outcome?
I see what you mean. There have to be some differences, right? No two situations are ever exactly alike.
Mhm.
What kind of differences are we talking about? What could potentially make Roku's journey different from Netflix's? And could those differences explain why the market might be undervaluing them?
Well, one difference is the level of competition they face. When Netflix started expanding globally, the streaming landscape was relatively open. Today, Roku is entering a much more crowded playing field, with established giants like Amazon Prime Video, Disney Plus, and Apple TV Plus already vying for viewers' attention. It's a streaming battle royale out there.
That's true. So the question becomes, how can Roku differentiate themselves in this crowded market? What do they offer that's unique enough to attract new subscribers and keep their existing users engaged?
Exactly. We have to look beyond the hype and really analyze their core value proposition. Are they primarily a platform provider offering access to a wide range of streaming services? Or are they aiming to be a content creator like Netflix with their own original shows and movies? Or are they trying to be both? And can they effectively compete on both fronts?
And how does their reliance on advertising revenue play into all of this? The article mentioned that a significant portion of Roku's income comes from ads. But how sustainable is that model in the long run, especially as more and more streaming services emerge? That's another crucial point. The advertising market can be incredibly unpredictable. And with more players entering the streaming arena, the competition for those advertising dollars is only going to intensify. We need to ask ourselves, how strong is Roku's advertising platform? Can they attract, and more importantly, retain advertisers? This is especially challenging in a global market where you're dealing with different cultural nuances and advertising regulations.
So are you saying that even though Roku seems to be mimicking Netflix's successful strategy, the context has shifted significantly?
Precisely. And that's where the real analysis comes in. It's not enough to just draw parallels. We need to dig deeper and understand the specific challenges and opportunities that Roku faces in today's streaming landscape.
So while their global expansion strategy is certainly exciting, we can't ignore the fact that they're entering a very different playing field than Netflix did a few years ago.
Right? And all of these factors, the competition, the reliance on advertising, the challenges of global expansion, could have a significant impact on Roku's future growth and profitability, which ultimately determines its valuation. The market might be undervaluing them, or it might be pricing in these very real risks.
And that's why it's so important for investors to go beyond those attention-grabbing headlines and really do their homework before making any decisions. Don't just take someone else's word for it.
Exactly. Informed investing requires a healthy dose of skepticism. We need to scrutinize those financials, really compare Roku to its competitors, and ultimately form our own conclusions.
So is Roku a hidden gem waiting to be discovered? Or are there underlying factors that justify the market's current valuation? It's up to each investor to decide.
Exactly. And that's what's so exciting about investing. It's a process of continuous learning and discovery.
So before we wrap up this deep dive, what's one final thought-provoking question that you want to leave our listener with? Something to really get them thinking as they continue their own research.
Well, we've talked a lot about Roku's platform and its potential for global dominance. But there's another side to their business that we haven't really touched on. The hardware side. Roku is known for its streaming sticks and boxes. But how does that part of their business fit into the larger picture? Could it be a strength, a weakness, or perhaps both? And how does the competitive landscape for streaming hardware affect their overall strategy?
That's a really good question. It makes you wonder if the hardware side of their business is holding them back in some way, or if it's actually an advantage. It seems like there are a lot of different factors at play here.
Absolutely.
Yeah.
And that's the beauty of this kind of analysis. It's
Yeah.
not about finding easy answers. It's about asking the right questions, exploring different perspectives, and piecing together the puzzle to gain a deeper understanding of the company and its potential.
So as you continue your research on Roku, think about their hardware strategy, their position in the market, and how all of these pieces fit together.
Remember, investing isn't just about following the crowd. It's about using your own critical thinking skills to make informed decisions.
It's interesting to consider their hardware business, like alongside their global platform ambitions. I hadn't really thought about how those two pieces fit together before.
Right. Well, it makes you wonder, like, are they spreading themselves too thin?
Mhm.
Or if having that hardware component gives them a unique advantage
Right.
over competitors who are just focused on software and content.
Right. Like maybe having those physical devices in people's homes helps build brand loyalty or gives them more control over the user experience.
Yeah, that's certainly a possibility. They could leverage that hardware presence to gather valuable data about user behavior, which they can then use to refine their platform and target advertising more effectively.
We should also consider the potential downsides, right? Manufacturing and distributing hardware can be expensive and complex, especially as they expand into new markets.
Exactly. And they're facing stiff competition in the hardware space from companies like Amazon and Google, who are often willing to sell their devices at or near cost to gain market share.
So it seems like their hardware business could be both a blessing and a curse. It offers potential advantages, but also comes with its own set of challenges and risks.
Absolutely. And that brings us back to the central question of this whole deep dive, right? Is Roku truly undervalued? Or is the market accurately pricing in all these complexities? There's no easy answer.
Yeah. It's like we've uncovered all these different pieces of the puzzle, but we still need to figure out how they all fit together to form the complete picture.
Right. We've talked about their impressive growth, their ambitious global strategy, the competitive landscape, their advertising model, and the dual nature of their business. Each of these factors plays a role in determining Roku's true value.
So where do we go from here? What are the key takeaways that our listeners should keep in mind as they continue to explore Roku on their own?
Well, I think the biggest takeaway is that investing requires careful consideration and a willingness to look beyond the surface. It's easy to get caught up in the hype or focus on a single data point like a price-to-sales ratio.
Right. But as we've seen with Roku, there's always more to the story.
Exactly. To make informed decisions, we need to delve deeper, analyze multiple factors, consider different perspectives, and ultimately form our own conclusions based on the evidence.
And remember, investing is an ongoing process of learning and discovery. There's always something new to learn, and the market is constantly evolving. What might seem like a sure thing today could change drastically tomorrow.
So stay curious, stay informed, and most importantly, stay engaged with your investments. Don't be afraid to ask tough questions, challenge assumptions, and do your own research.
Well, this deep dive has given you the tools and insights to navigate the exciting and sometimes complex world of investing. Now it's up to you to use those tools to make informed decisions.
Remember, successful investing is not about following the crowd. It's about making independent, well-informed judgments based on a thorough understanding of the companies and the markets.
So keep exploring, keep learning, and keep pushing yourself to become a more confident and knowledgeable investor.
That's the key to achieving your financial goals and building a brighter future.